Righto, welcome to the blog for Tuesday, 24th of July. Here we are at day 32 of 65 of the 3-month compound effect challenge. So making forward progress every day and applying my edge method. This is a 13-week challenge up to week 7, of the 13-week challenge, and the goal is to just create an absolute black and white method where I'm applying my edge day in, day out, doing the same thing and moving ahead at day 65 with fantastic results, information, confidence and belief within this trading method that I'm creating. So as far as today's concerned, daily charts, these are telling a bit of a story that's not real complete. I mean, this area here, the support area on the daily charts, and it's always marked on the charts, but it's significant. It's holding the markets up. The market's certainly dealing around it, but there's a lot more going on behind the scenes. The 15-minute chart shows a good concept of this. So basically, going back Thursday, the markets tried to make a higher high, and that's when it all really changed. From there, we got underneath it, a bit of a resistance, or what was a support. Then we got underneath it, used it as a resistance, and it knocked it down. Friday charged down. There's certainly some momentum on the downside over the weekend. Then opening up Monday, even though it was a red candle, the cash market was certainly green, and certainly some momentum back with the buyers. And all of a sudden, this pre-market, we had some holding formations here. So I went from a selling situation to an area where they're really starting to buy, believe that this area here, once they got up above this, the buyers will really start to go. The fact is they've got underneath, back under this level, uses resistance, push lower, and just keeping an eye on this particular chart. And it became quite obvious, even in areas where expecting the market to bounce, just to be careful, because it was going to use this sort of these lows as resistance, and these sellers have certainly got some momentum at the moment. And this trend line here is also going to be an area that is going to come into play possibly on Wednesday. So with the top-down analysis, using the daily charts to mark these solid blue lines, the 1-hour charts, and these are the most significant as far as key levels in the market, these dotted blue lines. So really looking at 37 and 48 as two significant areas of the market. And then anything that kind of gets missed in between, sometimes the 1-hour charts, just not quite enough information to get some key levels. And this is a level on the 15-minute chart at 37, which had a big play in today's markets, which is also quite significant. So I find usually there's 3 or 4 key levels in a day. At the moment, there's a few less than normal, just because we've got quite ranging quite trending markets. So for that reason, there tends to be less support and resistance. Once we get back into a sideways movement, sideways movement could be 20, 30 points, but once we get in sideways movement, there's a lot more support and resistance areas that will be formed. So using that top-down approach, getting the key levels, and then pre-identifying areas based on my trading plan. Within my trading plan, there's 3 strategies. A continuing trend strategy, and using specifically these key levels and only trading around these key levels. Then looking for the break high, break low areas. So again, only looking for significant price action levels. And then the pivot strategy. So again, there was an opportunity today which didn't come into play. We didn't actually get to the entry, but again, it's predefined areas, and that's where the strength is just not relying on sort of signals or indicators to do the job. It's having predetermined solid areas in the market, and then applying blueprints over the top of that, and that creates confidence and belief in a system. So as far as today goes, this market here really started pushing down. Of course, the first direction is one I always look at, a directional breakout trade. So on the downside here, based on the 15-minute charts, it was hard to see it coming, and there's certainly some support around here, and believe that this is an area where the market could potentially bounce up from. So normally there's a key level here which we got underneath, and then look to buy here at this key level, sell here at this key level. So this would have been an area that I considered selling, but they're just based on the particular setup, there was too much support here, and this area up here that I want to go back up to, because this was an area back here where it's come back to, and so it's pushed up through the level. So this just meant this key level, it wasn't appropriate for the particular trade, and from there Even though I didn't have a lot of confidence at this stage in the downside, it pushed through it, and from there the sellers really started to come in. Now we're getting down towards this level here, so this is a key level on the 5-minute chart, and basically dealing around this area. So there's an opportunity for a breakdown trade, and also this little area here indicates a 5-minute continuation trade. So let me go to the 1-minute chart to break it down a little bit more. So identify this. So there's already a key level in this low region. So if there wasn't this key level here, which is already pre-identified, what I'll do is go back and just have a look at what I call immediate price action, and go, as the market's dealing sideways here and trying to go lower or higher, picking a level based on price action, which would be anyway 37, 37.50, based on what the market keeps going up and down from, and then looking for a trade around that. So what I'm looking for is the markets to pop back up and the predictive start to put pressure on the downside, although the market's going down to the downside as well. So this is where we made a low. Well, obviously there's a low here. We've popped up here and made another low. At this stage there's not really a formation yet because the predictive average is still down. Wait for the predictive average to pop up, which it does here, and then all of a sudden this is where the pressure comes. So we've got thrust, at least a 4-tick push past that significant key level. So looking for, and if you're patient, many times market pops back to that level, and then that's where they drive lower from. So this is what we're looking for as far as the breakout trade. Pop up to this level, drive lower, so just push through a little bit. Then we've got a 6-tick movement. The downside looked quite good. Russell's pushing down as well, but then also momentum, as far as short term, really started to shift, and as it started to drive up here, it became evident that it was looking to go higher, and actually got out for a 2-tick loss. Moving on, 5-minute. For me, it's a 5-minute continuation trade. So what was happening? It's actually a 5-minute sell, same sort of deal, 5-minute continuation trade. Round this area here, if you look at the actual predictive, and what I'm using is the 5-minute chart with the predictive average, just to find the general area. So I'm not necessarily looking for the exact 5-minute sell, 5-minute buy, or anything like this area. I'm looking for the general area. So as the 5-minute sell is coming up, I'm then switching over to my price action technique to get an entry. Okay, so there's a key level around here, so obviously this is what I'm looking for. And what I look for is market come down, pop up, get through the key level, and then just pop back and get some resistance, which then go lower. So what I'm doing is selling at the key level rather than the actual indicator, because for myself personally, I just find that the best option to do it, and it's based on physically what other traders and prices that other traders are looking at, and I just have confidence that level can hold and then drive lower. So around this area here, potentially a 5-minute sell was coming. In the end, it's just pushed lower. It's never come. As far as what I'm looking at, I know the area is coming. As it's pushing down like this, it's got underneath my key level. As soon as it did that by 4 ticks, and that confirms the area, I placed the order at 37. So unfortunately, it's just missed by a tick, and then it's gone tumbling to the downside. And so that would have been my equivalent 5-minute sell, or what I call 5-minute continuation. So 5-minute breakout trade loss, 5-minute continuation, no entry. For me today, there's 4 potential setups. From there, we've pushed down lower. We've started popping up here and coming back towards the low areas here. So this was an actual 5-minute sell, but for me, there's a significant level here again at 13.28. So while we're sitting above this level, I see this 5-minute sell as not a bad opportunity, but of course there's going to be support here. This is an area I've already identified the market. Until we get underneath this area here, I'm not convinced in taking the sell, and you can see that market really bounced around it and respected this level, and from there it's pushed up above it. So not looking for a 5-minute break or a 5-minute sell, just because there's a key level here which we're yet to get underneath, and what we need to see is some thrust through that area, pop back, and then take the trade. And that never eventuates. So that particular setup there, just not even considering that situation until we got under here. So it's not even an arrow there to consider that situation yet. From there, we started reversing and pushing up. This is what I was really interested in. When I see an actual 5-minute sell area failing, what I'll do is go to the top, next pivot, so top here, and look for the market to apply pressure here and buy and get the reversal of the direction of the movement. So around this area here, really watching other markets. I want to see that at least one of the markets, all the markets is hanging there or breaking the area, and as it breaks that area, buy and get a continuation up to basically the next level again. But that never came. It obviously pushed back to the downside, but it needed to get a bit higher. So I'm only looking to buy once I get that confirmation. There just wasn't enough here. Even though I'm looking at it, there just wasn't quite enough there yet. And from there, it's pushed down lower. So that was the reversal setup. This one here, breakout setup, and it's one that actually physically came. It met my blueprint. There was actually a physical entry there that worked, but I didn't take the trade based on a final question, which I always ask myself. It's a bit of a discretional area, but it's an area where it just gives me, and it's very well described. It's not like I'm just basing on feeling or anything like that. It's going to be a very well described area. But with any of my trades, the final question I ask myself is, for example, breakout or continuation, momentum trades. So is there continuation here? Is there momentum? Or is there a breakout here? So this particular area here, it was potentially an area it could pop up. Just thought the risk of it popping up for going down lower was just a bit too much. Even though I believed once the area got down here that it had definitely a chance, it was just for me a little bit risky, and I'm just just looking to reduce that risk where possible. So just to go to the charts to show the actual entry, what happens is obviously around here I was looking just to set up, looking for the reversal, so looking at buys because we're sitting above this 1328 level. Then all of a sudden the other markets, the ES, especially the Russell, really start putting some pressure back on the downside, and the Russell started looking at slows again. So selling pressure is definitely around. I go to the 1 minute chart. So here it is here. We're looking for it to bounce, go up. So it just never gets there. And then also we start coming back under this line. As soon as we get 4 ticks or more back under this line, this confirms that we're potentially using this as a resistance. So it's obviously it's a support or resistance line while we're hanging above it, or even just drifting underneath it. It's still support. Once we drive through it and get, I mean technically it should be, it's 4 to 5 ticks. I say 4 ticks if it's with the overall direction, 5 ticks if it's a little bit against the direction. So I need at least a 4 to 5 tick movement underneath this particular area here, and that confirms the downside. Then for it to pop up, use it again as resistance and push lower. So for me, just the overall likelihood of it holding was a bit too 50-50, and so for that reason, even though there's an actual blueprint or entry there for me, which would have been right here, would have popped up 3 ticks and then went, but it was too much of a risk for myself, so I've left that area there. But just, I mean, hopefully you can see the blueprint of that particular area. We're trying to go lower, we're not, and then as soon as we get under this predetermined level, use that as resistance to sort of hit its head and then drive lower from it, and that's where it's gone. And as far as the rest of the markets here, because we're making lower lows, the downside is just too strong for me, and it's only thing I'd start looking at is directional setups or reversal setups. But for that to happen, we need to start making significant higher lows before I start looking at that, and that never came. It just got too volatile towards the end, and you can see this key level again, the market's bounced off it, so 1328 is certainly a level to keep an eye on. So overall for the day, just the one small loss there with the breakout trade, continuation trade, just a miss by 1 tick, unfortunately there, as far as a 5 minute selling area. The reversal, like the setup that have a lot of confidence in, they're ones that work really well, but just didn't quite get there. And then the breakout, again, a setup that came, it was a blueprint that was there to be taken, but just the overall, I'm happy with everything's set up as far as a systematic approach, and the final say was that there's just too much of a risk there to take the trade. So that's a wrap up for Tuesday. Back on Wednesday.